Chapter 2, Homework Problem 3. In your textbook, this is labeled Exercise 211. Here's the problem. It tells us that this company had these three transactions. It wants us to record those transactions in the accounting equation using the table that we talked about in class, and then do an income statement, a balance sheet, and statement of cash flows. So we can do this. It's not so tough. So they perform services. Let me highlight the important words for you. Perform services for $36,000 in cash. So that's revenue, which is part of stockholders' equity. So that's $36,000. And we got cash, $36,000. That's our first transaction. Our next transaction, they tell us they paid $18,000 in cash to rent office space for the coming year. So what you need to realize there is that's 11 months for this year and 1 month for next year. But right now for the journal, we have to list the entire amount because that's what we spent. So our prepaid rent was $18,000, and that's an asset of $18,000 because remember, anything you pay in advance is an asset. Now at the end of the year we used 11/12 of that. So if you take 11/12 times 18,000, you'll come up with 16,500. That's rent expense. So that's used rent. So that's a reduction to rent expense. And that reduces our income. So when we're all finished, and by the way, this is one of those multiply by fractions things that I told you you'd probably forget about by now. This is one of those things. If you have a standard TI whatever calculator, you put in 11/12, it'll automatically convert it to a decimal and make your multiplication easy. So let's figure out our totals. 36 minus 18 is 18,000 in our cash account. In our cash account. In our prepaid rent account, we have $1,500 left. 18 minus 15. And our retained earnings, our stockholders' equity, $19,500. So that's laying it out in the table. Now let's do the forms that they want us to do. And the first one is the income statement. And the income statement, we have revenue of $36,000. We have expense of $16,500. So our net income is $19,500. The nice thing about using the table is as long as you do the math correct, and it's pretty simple math, you have the answers already there. You're basically just copying them over. Now let's go to our balance sheet. We have our assets, our cash of $18,000. See where that came from? We have our prepaid rent. See where that came from? So and that's it for our assets. So our total assets is $19,500. Like we talked about the other day, remember that everything you have is owned by somebody. If it's you, it's called equity. It's ownership. If it's owed, it's a liability. So in this particular case, we don't owe nobody nothing, so that makes that part easy. And our total equity here, we had no common stock at the beginning. All we have is our ending retained earnings of $19,500. Pretty straightforward. Now, you're going to look at balance sheets and income statements for the rest of your careers. They're going to be way more complicated. They're going to have lots more stuff on them. They're going to have lots more lines. But they're the same thing. An income statement is revenue minus expense. Nothing else. The balance of the accounts go on the balance sheet. And the big, what you got to remember is the total assets always have to equal total liabilities. That's the big takeaway when it comes to balance sheets. So this stuff really is not all that difficult. Like I've said in class many, many times, the thing that makes accounting difficult is accountants. Okay, the next thing it asks us is the statement of cash flows. And cash flows are you explaining where your cash came from and where your cash went to. Well, our cash came from dealing with our clients, so our cash receipts from clients was $36,000. Our cash went out for operating expenses, in this case, rent, $18,000. That's what we spent. We're not talking about how much we used. We're talking about just the cash part. This is where cash flows and income statements differ. This looks at how much cash went out, not how much of it was spent and how much of it we're going to carry over for next year. So altogether, our net cash from operations was 36 in, 18 out, 18,000. Now, investing activities. When we buy or sell property, plant, equipment, stocks from another company, bonds from another company, land, furniture, fixtures, planes, boats, trains, automobiles. We didn't do any of that this time. Zero. Financing activities. That's cash from our shareholders for common stock, preferred stock. It's notes, it's mortgages, it's all of that. We didn't have any of that. So, our net change in cash was $18,000. Our beginning cash was zero, hence our ending cash balance, $18,000. Now, the last question they ask you is, let me read it exactly. Ignoring all other future events, what is the amount of rent expense that would be recognized in 2019, next year? Well, not to put too fine a point on this, but we only have $1,500 left. And they said ignore all future events. So the answer to that has to be $1,500. We can't spend what we ain't got.